All right, we are in the process of having people come in from the waiting room, so we'll just give it another minute. Thank you very much for your patience. And then we'll go ahead and get started. The call is being recorded today, so for folks that aren't able to join us at the beginning, or for folks that would like to either rewatch or pass it along to other folks, feel free to do that. We'll make sure that the recording is posted. So with that, it's 4 past the hour. Our goal here today is to have the session run no more than a half an hour, 30 minutes. We'll end up by the bottom of the hour, and then allow time for questions if there are any. So first of all, hello, and thank you for joining this month's Peer Executive Group's discussion around planning for the future of your business. My name is Michelle Fisher, and I work with Dan Crowley, founder of Peer Executive Group, and his team. And today I have the pleasure of introducing our topic and speaker, Corey Cox. So we recognize that you are all entrepreneurs and business owners looking to, bear with me one second, just admitting some more folks into the room. Sorry about that. Okay, one more person and then I'll go back to my script. So we recognize that you are entrepreneurs and business owners, and we felt that this topic may be very relevant and of interest to the group on the call today. It is around protecting your business and planning for the future of your business. And we worked with Principal to bring in their expertise. They are one of the leading carriers in the world when it comes to business planning and business solutions. They are a top 500 Fortune company. Actually, I think they're currently ranked 201. So I would actually put them in the Fortune 200 rankings. A-rated carrier. They have great interactive software for business owners. And rather than take away from what Corey is going to be talking to you about today, I will turn it over to Corey. As I said, he is the reason, I think I said this, he is the Regional Vice President for Principal, and he is our go-to person. So with that, Corey, I will turn the call over to you.
I appreciate that, Michelle. So without further ado, I'll go ahead and get into it since we're 6 minutes in here. So let me just share my screen and we will go through what I have today. Like Michelle said, we are, the leading carrier in terms of business solutions with our advanced solutions team. This is our main focus. So obviously, right now, planning for the future of your business is the topic, but this is top of mind. With the quit rate, the great resignation, all that stuff, whether it's for your key employees or yourself, estate planning as well, with things looking to sunset here in a couple of years, this is all top of mind. So, if you don't have a valuation done, I wouldn't feel bad about this, because it's pretty common, as you can see here. 52% of owners have never had their business valued, and even those that have, it hasn't been reviewed. 68% of those have not been done in the past 2 years. So that's something our advanced solutions team does here, complementary. Here at Principal, a team of CPAs and attorneys, like Michelle mentioned, they do hundreds of these a year. So whether that company is valued at $1 million or $100 million, we've seen it all, we've done it all, and more than happy to take a look at that to find whether that's gaps in coverage or key employees that we need to cover, or even yourself as a business owner, we want to take a look at as well. So there's several factors that are impacted, by knowing and protecting the rights value when it comes to your business. So your estate plan can be impacted with regard to how your heirs might be taxed. Your buy-sell agreement will indicate what value should be considered for these various triggering events. And losing or retaining key employees can also impact the value of your business to a potential successor or buyer. So, do you have a ready market for your business? Have you done everything you can to get the value of the plan from your business? Most won't seek a business valuation until they're ready to sell. But I think it's important to get ahead of that and get valued before ready to sell the business, so you can protect your business as well as plan for any future events. So diving into, what are the outside factors that influence the value? So there are several factors, really. We can look to revenue ruling 59 to 60 to provide guidance on, the consideration that might impact a business value. So a nature and history of the business, outlook of economy and specific industry, financial condition of a business and its book value, earnings capacity of a company, as well as nature and value of intangible assets of the business, such as goodwill, and relative size, the block of the business interest to be valued, and really any prior sales, as well as market price of actively traded stock of corporations in the same or similar business. How can you influence the value of the business, whether that's by increasing the cash flows, improving sustainability of cash flows, as well as documenting sustainability. Also, improving the facility's appearance, paying down debt, solidify and diversify customer base. These are all just a few that ways to influence that value, as well as building a solid management team and developing a successor, all of great importance. I think, a lot of questions we have are, those valuation methods, how is it done? What do we look at? What are the different ways we can do it? It's dependent on, what type of company we have, but the fair market value, that's the amount agreed upon between a willing buyer and a willing seller. That if you're looking to sell a company, that's kind of what, you're going to be looking at. But other methods we have are like the adjusted book value. So that's just going to be, like your assets minus liabilities. And then you have capitalization of earnings, multiple of discretionary earnings, excess of earnings, and discounted future cash flows. So this is all broken down on our business valuation process, and our advanced solutions team picks the one that, that fits kind of the area of focus that this company is in. So we do a great job at that, and, explain the difference, breaking down those numbers and just seeing what fits best. So that's our business valuation process. Now, what comes from these valuation processes, and the important thing is that business succession planning. So it can be easy to think that you have plenty of time to prepare for a transaction in business ownership, but as we all know, time goes by faster than we all think. So whether it's planned or an unplanned event, they can definitely make a big impact in your business. Examples: retirement, dissolution, death, disability, even divorce, or termination of you or another owner or key employee. All of these are reasons to, or potential reasons that we need to take a look at business succession planning. So benefits of an effective and well-funded agreement: they allow you to have the right amount of money in the right place and at the right time. So let's take a look at how your fellow business owners are preparing for succession. As you can see, many of them aren't really prepared at all. We're looking at 37% of business owners do not have a business succession plan in place. And of the businesses that do have a plan, only 31%, 31% don't have a mandatory buyout trigger for death. And we see that a lot in, whether it's our buy-sell reviews. There isn't anything notified of that, so we need to take a look and dive deeper into that, as well as 67% of agreements don't have a mandatory buyout in case of a disabled owner. So again, we can take a look at that on our disability side, to see what solutions best fit. Well-crafted and fully funded business succession plans and/or our buy-sell agreements offer protection, for a variety of events like we just discussed. Many you might not even see coming, divorce, retirement. Hopefully you have an idea of retirement, but again, sometimes it can come faster than you might think. So a change in relationships, marriage relationships between owners can fall apart. So, if for whatever reason you have a business partner and they go through a divorce, you want to make sure that there's a plan in place to either buy out their shares or have someone else, take that place. Owners can certainly grow apart, develop different plans, visions, strategies, or really any approaches to doing business. So maybe one partner is working harder than the other, or perceived, if that, it's perceived that way. Maybe they do, maybe they don't. Worst case scenario, embezzlement or other unethical or unlawful activities. Maybe an owner passes away in this event. Your new partner could be the surviving spouse or other family member, like I mentioned. So maybe it's a family member that you don't want running the company. Maybe they don't want to run the company. What's that plan in place to make sure that whoever is succeeding or taking over that portion of the company is a good fit? So again, an owner becomes disabled. From a pure business perspective, this can be more difficult than a partner's death. And any additional events that make a succession plan important, and those include mergers and acquisitions, divorce, bankruptcy, and retirement, like I had just previously mentioned. So planning ahead, it can help provide clarity, financial security, and peace of mind, which again results into helping maximize that financial return, minimize income tax liability, mitigate risk, and increase the chances of a successful transition. So three keys really to succession planning. Determine when you want to sell your business, assuming you want to retire when you sell. What will it take in cash to generate the retirement income you need while still allowing the business to continue growing? You also want to determine an appropriate sale price by figuring out what your business is worth today in cash. The stability, the growth potential, and strong management increase the amount of outside buyers will pay for a business, and they can also increase the chance of a successful transition to family members or key employees. And you can also can your business survive, or can it grow without you? And third, skip there. Third, but certainly, apologies. Third, but not last but not least, determine who you want to sell your business to. If you plan to sell to an outside buyer, do you know how to get the best price and minimize your tax liability? When selling to an insider, like a key employee or a family member, you'll normally get a lower price and may get paid with a promissory note instead of cash. This just means you take on some creditor risk. There may are ways to decrease your tax liability and your creditor risk. So contingency planning is very important here. This increases the chance your business will survive if something unexpected happens before you retire. If the business can continue, then you or your family are more likely to receive its full value in this case. So it's really important to note, business owners have estate planning challenges and opportunities that non-owners don't have. So if your estate plan doesn't take your business into account, it's not complete, it's incomplete here. So let's take a look at each step a bit closer here. So when will you sell the business? Retirement considerations. How much longer do you want to work before retiring? Do you want to stay active in the business until you retire? And then really, do you want to retire at all? What financial considerations do we take into account for each of these, right? Lifestyle. Do you intend to maintain what you currently have? Healthcare, will you pay for it when you retire? Longevity. What if you outlive your finances, as well as economic climate? How might this impact your plans, as well as your health? What if you experienced an unplanned illness or injury? Some successful succession planning ideas. Make sure the plan addresses, of course, key triggering events, a clear business value, as well as define mandatory buyout, as well as define, what is that definition of disability? Sometimes we see in some of these plans that, disability is outlined, but what we need to break that down a little bit further and make sure that that's taken, into account. So key triggering events, like I said, death, disability, departure, as well as change in any relationships. So top mandatory triggering events. Here we have a graph here, percentage of business owners agreements that cover these top transition events and whether they're mandatory or optional. You have, your 24% optional triggering events there at death, as well as the 69% mandatory triggering events at death. So these are the, the top ones that we're seeing. Disability 33. You see here kind of what those top triggering events are. So many years before the eventual sale, a successor should be identified and groomed for this ownership role. This isn't something that happens overnight. So the successor might, indeed be a family member, could be a co-owner, could also be a key employee or even an outside party. So keep in mind that, finding a potential successor, this can be quite a big challenge. So ideally you'd have someone who's qualified and motivated, of course, and who has the financial needs to purchase the business. And that's something that we can help, whether that's a select reward based plan or some type of deferred comp plan to help finance and purchase that business. But since potential successors may not have the financial resources, you'll want to make plans to make that transition go as smoothly as possible. So why do you want to take over the business when you retire? Think about how your business runs. Can it survive if you retire? Even if retirement is a long way off, understanding the planning process now will help you run the business in a way that'll make it easier, to leave when you're ready. If you die or become disabled before you retire, proper contingency planning can help, that business survive your departure so that you and your family receive its full value. Common exit techniques, buy sell, whether it's stock or an asset sale. Again, something we do here, we have, sample buy sell agreements, but we can also do funding, whether it's with a term product or a permanent product. Also, capital transfer, consulting contract, ESOP or executive benefits principles is certainly top of mind, especially on those ESOP conversations. Kind of have the whole package here, so more than happy to talk further on that. As well as gifting. So if it's the family or charity, we can certainly look at that technique as well. So gifting to the family, the most popular succession strategy that we see, 2/3 of businesses are family owned here. Why is it so difficult? Frequently it's because the owners didn't have a formal transition plan. These owners could benefit from our planning process that helps address, your unique needs. Considerations for family-owned businesses, price must be fixed or formula-based. A state must sell at death at the agreed upon price, and the agreement must prohibit owner from disposing of interest without first offering it to other party or parties, of course, at more than the agreed amount price. So special considerations again for family-owned businesses. Make sure that buy sell is adequately funded for your goals in your business. Again, maybe there is a buy sell in place, but there's a good chance it hasn't been reviewed here in the past couple of years. So whether that business has grown, ownership's changed, it's always something that we want to review. And again, something that our advanced solutions team of CPA and attorneys do on a daily basis. So you might wish to, have the agreement establish the value of the business for those estate tax purposes. What if you do have an existing agreement? Do you already have it in place? It's important that you review it. Like I just previously mentioned, have all the possible common problems been addressed? Does it address the key considerations we addressed earlier? Is the method used to value the business clear? Is it appropriate and is it consistent with the rest of it? As well as the mandatory buyout, is it required upon death and or disability? And then what about retirement? Is disability defined and consistent between the agreement and the policies? Funding the agreement, it just needs to tell the same story, to make sure that we're funded and covered in any of those aspects. So we went through a lot here. So I guess I'll open it up to questions and see what we have and if there's anything else I can clarify.
So I just sent a chat. You're welcome to ask questions through the chat button. Mine's at the bottom of my screen. Hopefully yours is there as well. It just says chat. Or please take yourself off mute and ask away.
I think one thing I didn't mention too is our advanced solutions team. I mean, they've done thousands of these reviews, both the informal business valuation as well as buy sell review. The business valuation is not IRS approved, but we can use that for our underwriting purposes. So if we're looking buy sell coverage, we're looking for maybe supplemental retirement income or like a select reward based plan or something to help fund a key employee buyout, we can utilize that valuation in order to do so. We also have sample agreements out there. I think I did mention that on buy sell review. So if there's something that you want to take back to your attorney or CPA to kind of review, we're more than happy to take a look at that as well.
And I will also mention, so I think from a next steps standpoint, couple of things. One, if you do have questions or you want to have additional conversations around this or any other business succession planning or any other topics pertaining to protecting the future of your business, I refer you back to Dan Crowley or Owen Crowley, who's the business development manager for insurance with Peer Executive Groups. I don't think they were able to join today's call, but they absolutely would welcome additional conversations from the folks on the call today. And then the other thing that I would mention is, and I just saw it come out this morning, every Thursday, Peer Connector, the weekly newsletter, comes out electronically into your email. And again, if you're interested in learning more about this and some of the other topics, every Thursday we provide content in that newsletter. So today, if you were to go out there and take a look, you'd see an article on, it's actually called 7 Ways to Successfully Navigate the Family in Your Family Business. Next week is protecting your employees and comparing benefits, followed by key person disability, and then finally, how to protect key employees in your business. And then the last one for February is recruit, reward, retain, retire. And again, these are all, this is all content that is provided to us through Principal. And again, like I said, we chose Principal specifically because they are the leading insurance carrier in the business solutions space. So I will pause one last time and see if there are any other questions or any closing thoughts from Corey. And if not, we'll go ahead and wrap up for today. Like I said, this is being recorded and it will be put out on through your website to re-listen and re-watch.
Yeah, I would just add that, this isn't anything new for Principal. We've been in the business space for 20 plus years, and I think it's safe to say we're number one in that space when it comes from the beginning process, getting things enforced, as well as our business market administration team. So there's a lot of great resources at hand. I think that's sometimes overlooked is, once it's in place, now what do I do? Well, you're assigned a dedicated administration person here who is an employee of Principal. So I didn't want to forget mentioning that. But again, any questions, direct it back to what Michelle said, and we can have further conversations. Happy to.
Yep, Dan and Owen will get, whether it's Corey or the appropriate folks together with you. I do see, Corey, a question. What is, from Bruce Jones, what is the approximate cost of having an evaluation done?
That's a great question. I should have touched on that. It's complimentary. So this is something that Principal does. I should note, though, if it's a valuation that we're looking to, have the company sold in less than a year, I'm going to steer you towards having a formal business valuation done by an outside party. But, if we're looking for, like we mentioned here, succession planning, maybe doing a buyout for someone, those are absolutely what our advanced solutions team want to put together. So yes, complimentary and something that our advanced solutions team does at no cost. Great question.
Great. All right, with that, we'll go ahead and wrap up the session for today. I so appreciate everyone taking their time to join us. And Corey, special thanks to you for being our specialist on the call with us today. And look for more information in the Peer Connector newsletter. And then the last Thursday of next month in February, we'll be presenting another topic pertinent to business planning, protection, and the future of planning for your business. with that, I will wrap it up and have a great day, everyone. Take care.